Live from Bloomberg's new European headquarters in the City of London, I'm Naira Chehich.
And from New York, I'm Sherian. This is Bloomberg Markets. Time now for futures in focus. Bitcoin just can't catch a break. After recovering from a 5-day slump, the world's most volatile cryptocurrency dipped back below 14,000 after South Korea said it's eyeing new rules to regulate the digital currency. Right now trading at 14,500 in this past week. And oil also trading near its highest level in more than 2 years after pipeline explosion curbed production in OPEC member Libya. And in the next hour, we'll be getting the latest oil inventories. Joining us now from the CME is Chris Gersch, Director of Strategy at Bell Curve Capital. Chris, great to have you with us. Let's get started with Bitcoin, because South Korea now saying that they might be requiring the disclosure of real names for cryptocurrency transactions. How big of an impact will this have when anonymity is taken away?
Sherry, you hit right on the head. I mean, Bitcoin was founded on the anonymity of everyone, and having your name on a ledger is going to have a lot of those 2/3 of Bitcoin holders that have never sold. They're going to start selling, and that's what you saw overnight. You had that huge pullback. I think we have resistance at 13,500, but on very light volume. Only 500 contracts trade here at the CME. As an equivalent on the WTI Feb contract, we've traded almost 150,000 contracts today, so very light volume, but that move was, sharp to the downside overnight.
Yeah, we are seeing prices, though, being sustained past 14,000. Where can Bitcoin find that short-term support and also resistance?
Yep. I think short-term support is about 13,500. We've hit it against that the last couple of trading sessions, but ultimately I think it moves lower and tests last week's lows around 12,400 in the futures contract.
Also, let's move on to oil, because outages in Libya, also the North Sea, have put supply risks in play. What will it look like in 2018 if the OPEC output curbs continue?
I think OPEC has done a fantastic job. I think worldwide inventories, you've seen a massive decrease, and the bears in oil that want that price to come back down into that range around 50 have always said the U.S. shale, is going to really take into account, and U.S. inventories are going to climb. Well, the numbers aren't showing that. So ultimately, I think that you've got that move up to $60 right now. There's a little resistance here in the last couple of trading sessions on light volume, but the key number is 62.50. The 62.50 is the only place where the futures pump their brakes on the way down from 100. So I think that if we are able to extend gains above that number, you're going to see a massive rally up into the 70s, possibly first quarter.
Talking about massive rallies, gold now closing in on $1,300 an ounce. Is it all to do with just thin trading and lower volumes?
What a whipsaw gold has had. It's the only rally other than Bitcoin that people have been talking about here on the floor. And I think what you've seen over the last 2 weeks is just a really short squeeze on light volume. You've seen higher highs and higher lows every trading session. The key level that a lot of traders think, we're going to go back down to is around that, 1328 level. I think trading right around, 1300 is a safe bet to have. Until 1307, you go above that, I think we stay range bound. 1307, if we have a bid higher than 1307, I think you can hit 1350. So look for that key level of resistance to the top part at 1307.
Something to watch. Chris, great talking to you. Chris Gersch, Director of Strategy at Bell Curve Capital.